Oh man, so a low volume Saturday, Bitcoin holding flat, Fantom holding flat on the day, but have we created that all-important higher low, which could suggest we've bottomed out? Could this be the start of the reversal pattern we need? Bitcoin holding up pretty well today, didn't fall lower than 28.5, now sitting at 29,300 roughly at the time of recording this video. Does this mean we can start building back up past 30,000 to 32,000 and beyond? And similarly, will altcoins move with it? We're going to take a look at the key levels in the charts. We're also going to look at a whole bunch of interesting on-chain metrics. I know normally we focus on the technicals and some fundamentals. Let's look at some on-chain metrics to bring in that fundamental narrative to try to identify if we're at this all-important bottom where we need to start accumulating to build that generational wealth. So make sure you hit on the like button. Don't forget to subscribe. We're going to go into a whole bunch of detail in this video. As always, if you like my perspective, consider joining my course member live stream, ijaz.uk/member. Link is in the description to join those 3 times weekly course member live stream. So guys, as you remember, we had that relief rally yesterday on Friday. We ran quite nicely up to levels such as close to 31,000 here. I think the highest on this candle here was just under 31,000, right? And I was very clear in my videos, let's not chase these green candles. We do not have green candle disease. We do not want to get caught in the next move to the downside, because this could potentially be a dead cat bounce and we could be heading towards 24,000. Now, I continue to think that that's a level we could be heading to, and the probability still suggests we could head there because the bears are still in control. You have to follow the trend. The trend remains your friend until you see evidence of otherwise. And remember, if you haven't watched my videos on how to identify reversal patterns, make sure you search for that. That's a really important video, and that's what we're looking for now. We need to find these reversal patterns which suggest to us that we can start to bottom out now and create patterns which can help us start to get to the upside. And the first thing you want to start to see is you want to start to see higher lows. So we posted this low here on the hourly chart as low as 25,300, right? That really did push it down. And that's where we saw some really strong volume come in, some strong buy the dip volume come in, say, hang on a second, we're not having Bitcoin that low that easy. And that is where we saw the bulls take a bit of a rest as the bears take a little bit of a rest as the bulls took the momentum up towards 31. Now we've been in this kind of small channel sideways since, because the bears have neither got the strength to push us to 32 at the moment, and the bulls haven't got the strength to take us towards 32 at the moment, and the bears don't have the energy just yet to mount its next tack back down to 25k. So importantly, what we have for now is we have got this higher low if we can start going up. Now the next thing after posting your higher low is you want a higher high. So remember this high at 31, so you've got this high at 31, you now want to go post something higher. That is why this 32 level is going to be important. Something like this could then help us really start to create that trend to the upside, right? Doing something like this, collecting support from 31 and then heading back up to the upside. That would be a nice reversal pattern to start working our way to higher levels. Now, the downside risk from this chart pattern is that you do just get a big move from the bears, sending you past 25 and working down towards 24. That would be the natural move here, given what we've had. And you can see that's how it happens, right? You get big move, exhausting move by the bears. You kind of consolidate for a while, and then the bears go again, and then you consolidate for a while, and then the bears push again, right? So we need to keep an eye on that, see if that's what's playing out. You can also see the RSI has now called off, again, giving the room for the bears to push to the next level. Now, why am I looking at the 24 level? Because the 24K level is that key level. That's the next support level dating back to 2021. And also, if we head into our weekly chart, what I want to show you, remember, is our little bit of hopium, which comes in at this 29,000 mark. And you can see here the weekly candle is still above the 29,000 mark. And if we can get the weekly candle close above it, we could hold on to a little bit of remnants of hope that we can maintain this level and start working our way out. I know it's hopium. I know the more likely situation is we'll head to 24,000. But that is why in this video, I'm going to show you a whole bunch of on-chain metrics which suggest we could be creating this bottom. And if we are creating this bottom, we need to get ourselves prepared. We need to get our portfolio allocations ready for the next move to the upside. We need to start the process of dollar cost average, of nibbling on some of our favorite plays. Okay, let's take a look at the same pattern for Fantom, because over the last couple of hours we're seeing the same pattern, right? Fantom's following the same thing as Bitcoin. Fantom created its bottom all the way down. I think the lowest candle was about 24 cents if you were able to pick that up. Congrats. Then it ran up to a nice little high here of 43. You saw how quickly Fantom moved, the strength it showed when Bitcoin got moving. Even as I've started recording this video, Bitcoin's gone to 0.6% up on the day, and Fantom's now moved up to 1%. Okay, so we're seeing that movement now here. And shows that, you know, when things are looking good, certain projects are going to move to the upside faster, and those are the ones we want to be in, the ones with the momentum on their side. So again, same thing, right? We've managed for now to create that higher low, which is a good sign, but you have to post a higher high. Without a higher high, it's meaningless because you could still do this, right? And that's the fear here on Fantom. And the next level for me, like I made clear, is the 15 cent level, which is the bottom of the cup and handle pattern, dating back to, again, the summer of 2021. That's from here. I mean, it's crazy to think this is how close we're getting to super bottoms, but that's the journey we've been on in this crazy crypto market. Okay, so let's move on to some interesting on-chain metrics. And the first one I want to cover off is, and this is shout out to Will Clemente on Twitter. He shared this 3-day chart on Bitcoin, and he showed that the volume was super large on this candle. And this is just, again, testament to the fact that bulls are coming in to step up to say, hang on, we need to defend this level. But you've still got strong pressure from bears, okay? Strong pressure from bears to the downside, but bulls did come in, managed to turn a little bit of a green candle at that kind of 25,000 mark to say enough is enough. This is where we're defending the price. And anecdotally, that price makes a lot of sense, right? And we're going to come on to a few on-chain reasons of why, but also we know that 25K becomes a really important point for where people like Michael Saylor start to get margin called. We know a lot of corporations were buying in with average costs around the 30, 35,000. So 24.25 becomes a level where a lot of people have interest to defend that level and buy the dip, because it becomes a substantial discount for people to then bring their cost basis down. So it's a very important level, and you can see how that's being defended right now. Now, I also want to add that fear and greed index is sitting at 9. This is ultra low score. It's very rare to get in the single digits on fear and greed index. So this is really peak fear right now, and it just goes to show what the wider market sentiment is. Obviously, this is the wider global recession fears and the downturn, which we'll come on to again. You've then got the couple down with Bitcoin was already struggling, right? And then you had this massive crash of Terra Luna, further pushing us into contagion fears, other coins falling, a bunch of fears around regulatory issues. All that cocktail mixed up has us sitting here at an extreme fear of 9. But again, we can't get fearful at this time. We need to do the opposite of this gauge at every moment. That is why I show it to you every day, because we need to train our mind to buy in the red. And when this ticks up and starts to get into neutral and greed, that's when we're unwinding. That's where we are trimming our positions. Okay, so that was the first thing. We've seen good volume come in from on the 3-day chart. The next thing we want to look at is something called realized price. Now, again, these shout out to Glassnode, who share a whole bunch of really good on-chain data, right? And I want to spend more time in our videos going through this because we do a lot of technical analysis, we do a lot of fundamentals. Let's bring on more on-chain metrics. I'm going to take the time to not just show you the charts, but try to explain to you what some of these mean, because a lot of people just show these charts and gloss over what they mean. But there's a lot of complications around what these mean and how they're calculated and derived. And maybe in future videos, we can really get into the definitions of some of these. And the first one I want to look at is realized price, which a lot of people look at. Now, the realized price is an aggregated cost basis of investors. So if you took every investor roughly and tried to understand what is their cost basis, similar to what we were saying, right? What's Michael Saylor's cost basis? What's Square or Block's cost basis? What is El Salvador's cost basis? If we can understand that, we can therefore understand what the motivations are, because the cost bases are really important. Okay, and you can see here we're now coming down towards our cost basis, that bright green line there. And if we look historically, every time we touched or fell below the bright green line, we would set ourselves up for nice moves to the upside. I mean, if you picked it up there, for instance, just in 2020, you then had a nice move to the upside. Now we're getting closer to that level. And guess where that level sits? Exactly at our support line, which I showed you from the technical analysis at 24K. And I just love it when two different data sources, my technical analysis marries up with my fundamentals, which marries up with my on-chain. That really does give me something called confluence. When the data is showing you the same thing, it should give you confluence and therefore confidence in the levels in which you're coming up with. Okay, so that's the first thing I'm looking at, is realized price. The other thing I want to look at is you want to look at your moving averages as well. This is really important. In fact, let's go back over to my charts. What I'll show you is on a clean chart here, if I go into the weekly chart and I bring out two indicators, I want to bring out my 200 exponential moving average, and then I want to bring out my 200 moving average. And again, if you don't know what these mean, maybe we can make a video explaining what these two are. But I want to show you something important. You can see that we wick down to touch our 200 moving average, exponential moving average. That's an EMA, which is sitting at about 27,000. We touch that and we bounce back off of it, which is really good. Okay. Now, normally, if we use this chart, you see whenever you touch your 200 moving average, it's a really good place to buy, and you do get some big moves coming off of your 200 moving average. Now, another moving average you can use is your simple moving average, and the 200-week simple moving average sitting at the moment at about 22,000. Okay, so it's sitting at about 22,000 as well. Again, between our range of 20 to 24,000 that we're looking at. So again, expect a lot of volume to come in, a lot of buying the dip to come in, because you're getting down to your 200-week moving average, which is a huge level of support to be buying in at. Okay. Now, let's take a look at something else, which is giving us a clue that we're reaching a bottom. And this is something called MVRV. Okay, and MVRV is a ratio. Let me just move me out of the way so you can see a little bit clearly. You can go over there, mate. And what MVRV is it tells us, is the price fair? So in other words, what it does, it takes the market cap. Remember, market cap, to all intents and purposes, defines your price, right? The market cap of Bitcoin divided by the circulating supply will give you your price. Now, if you take that number and you divide by something called a realized cap, it will tell you if the price is fair. And realized cap is saying, look, market cap is the market value. But realized cap, and I know this is a bit complicated, maybe we can spend more time going into this, but realized cap is when have people actually moved their coins. So for example, if you bought at 10 grand Bitcoin and then you sell your Bitcoin at 40,000 next, your realize adjusts from 10,000 to 40,000 to show people have actually seen that. They've realized it. So it's really true, as opposed to a paper market cap, which is saying that Bitcoin's going up in market cap. Okay, confusing, but if you take that ratio, in other words, it's telling you, is the price fair? And the way you can look at this metric is, and there's a few different ways. You can see some people have put color bands on it as well, but generally over 3.7 on this scale on the left-hand side here would say you could start entering a possible top, and anything under 1 has indicated a possible bottom. And again, you can see here when we've fallen into negative territory, in other words, this green band here, it's been a great time to then pick up. If you look at the black line there, that's how the price moves, and you can see anytime the orange line falls into the green, these were really nice times to be picking up at these levels, and you can see we're heading closer to these levels at the bottoms here. Okay, so we're already in that level below 1, which suggests a bottom, and we're getting to now, you know, multi-generational, as in cycle long lows here. Okay, so these are really extreme lows we're coming down towards now on your MVRV. It's a really important metric for us to look at. Moving on, the other one we want to look at is something called entity adjusted dormancy flow. Now, a dormancy flow is basically saying, you guys have all heard of this before, right? In terms of, you need to look at the hodlers. Are people hodling? Are things on exchanges? Is it moving? What's going on? Well, your dormancy flows does exactly that. Now, if you have a high value in your dormancy flow, that means that coins are now on the move. People are moving their coins, they're selling them, they're putting them onto exchanges, and it's moving. They're not dormant. If the dormancy flow number is lower, then that shows you that we've got some hodling going on, and that's what we want. And again, look at this orange indicator, and look, every time it dips in, it dipped in early days here of crypto, then in 2015, 2019, it didn't even get into the green box really in 2020 after COVID, and now look how low we are here in 2022. Coins are not moving. People are buying, they're taking them off exchanges, and the coins are dormant. Very important that we take a look at this metric. Again, suggesting that we could be creating this multi-cycle low. And this is the evidence we need to start stacking up to say, hang on, as much pain as we've taken over the last few months, we are getting to some crazy prices that we can't ignore, but to start nibbling on some of these prices. One more to show you guys, and this one's probably the most complicated one. This is something called reserve risk. Now, again, we can sit here on another 10-15 minute video for me to explain the definition, explain the mathematical formula. But again, we need to understand, what does it do? And a low value, which is what we're getting here now, coming into this green box again, shows holder confidence relative to price. Okay, so what it does is it compares the incentive to sell versus the strength of the holders. Very, very important. So it compares the incentive to sell versus the strength of the holders. So if they have a high incentive to sell, this will start to go higher. At the moment, there is more strength of holders, i.e. less incentive to sell, more incentive to accumulate and to start building your position out. So the risk reward, in other words, is very high when you're in this green space. You can see how it was flashing to give you an opportunity to accumulate in 2015 all the way up to 2017, and it would have been absolutely right. If you bought at any point while this was in the green, you would have really enjoyed this as Bitcoin ran all the way up to 20,000, right? And then it told you to stop buying because the indicators are saying from this period don't buy, which was right because you had a high and then it fell down. Then it would have told you your next indication to buy was here in 2019, and had you done that, you really would have taken, and in this figure in during COVID, had you bought in those two periods, you really would have enjoyed that when we ran up to 64 and 69. And again, it's giving us that indicator to start buying, and it's giving, and the level of that indicator is now the same as 2019. It's almost as low as the COVID level, super crazy, and it's higher than it ever was at any point, lower than at any point here in 2017 as well. So really important, bunch of on-chain metrics giving us clues that we could be forming a bottom of Bitcoin. We need to keep an eye on this. We need to keep an eye on these on-chain metrics. We need to keep an eye on the technicals. Remember, the one bit of hopium we have, because overall, the bears are in control. We have to understand that. But the bottom can start to give us clues in the patterns it forms. We'll monitor that over the next couple of days, over the next couple of weeks, as it starts to create some sort of resemblance. Are the bears going to push us down towards 24 and try to head towards 20? Or are the bulls going to step in and say enough is enough? That 24 to 22 range is a range where we want to buy the dip, the risk to reward is high, and we should start accumulating our positions. That's what we need to look out for. We need to look out for, can we get that close on the weekly above 29? That would be even better, because if you can get a weekly close over the next couple of days, that candle closes tomorrow, we'll cover that off in tomorrow's video, then that is extra good news for us because we've not closed our weekly below 29,000, which is a really good sign on the technical chart for the weekly chart. Now, one thing we have to caveat all of this with is that Bitcoin is looking good, right? The on-chain data I'm just presenting you looks really good, but we cannot get away from the fact that crypto is following the NASDAQ and the S&P, right? We're following equities. And it would be remiss for us to not mention the fact that equities right now is not in a good space. We're a couple of % away from a bear market territory in equities. Remember, bear market territory is 20% correction. I think we're about 18% off the top of my head. And this is the bit that gets you. And I wanted to share this with you. We have to play probabilities. The Fed has embarked on 14 tightening cycles since 1950, and 11 landed the economy in a recession and the stock market in a bear phase, 20% down. That's nearly 80% probability right there. We can certainly hope for a soft landing this time around, but in my 35 years in business, hope is rarely an effective investment strategy. Okay, so we need to understand this. The backdrop is one of a peak in the liquidity and economic cycle, and what follows is the natural expunging of the excesses. Meme stocks, cryptocurrencies, speculative NASDAQ 100, even residential real estate, which is in a huge price bubble of its own. So this is the backdrop we're working in right now, guys. This is coming from the normal equity markets. They don't have any time for speculative assets right now. Like, forget where on the scale crypto is in terms of speculative asset. They don't even want to invest in tech companies right now. Tech companies are getting sold off because they want too much valuation right now. They just want to see cash in the bank. They want to invest in companies which are profitable, which have good balance sheets, good cash. They don't have time for the risk right now. But that's exactly when we want to do our work. When nobody else wants to touch it, that's when the risk reward is going to show itself, like in the charts we were looking at, that we could be getting to a bottom, and that's when we need to do our work. So we've got to weigh all that up. We've got a lot of work to do over the next couple of weeks, and we're going to monitor those charts and find those key levels together. So if you appreciate that, smash up the like button and subscribe. If you like my perspective, consider joining our course member live streams, ijaz.uk/member. We would love to have you in there. We can do portfolio critiques, we can do tokenomics, we can do technical analysis. Jump in there and be part of that community, as sometimes investing in crypto on your own can be a really lonely place. So come join our community and bounce your ideas off around with the other members and myself. As always, thanks for watching. I'm going to link up the video to the Do Kwon video from earlier. If you've not watched that, I explain exactly what Do Kwon's new plan is that has helped Luna 300x, I think, in just a day. So go check that out. Is there any hope for Luna? We break all of that down in the video. Thanks for watching, guys. We'll see you in the next one.